All right, it is Thursday, May the 21st, 2026. Current time is 8:47 a.m. What has happened so far in the S&P 500 futures is it got into positive 2 deviation on the daily. Rejected from there. That was at 4:16 this morning. Super common. Came down near the volume weighted average price, hovered around there, still hovering around there. It's anybody's guess at this point. It's not wise to take a position at this point in time. If I was in a position though this morning, if I shorted here, I would have probably been out here because that was looking very favorable. It never showed up as being a rejection point besides right here at 4 o'clock. You technically, for my setup, I would have to take a short here. Is when I take a short and then I get out of my position here. I would have broke even at best. It did break down though eventually. And what positive 3 deviation was from Tuesday, that's made some resistance kind of. Gotten into that. Positive 4 deviation was it, as soon as those people got the notification or bell that said it's in positive 4 deviation from Tuesday's level, then they would have seen this also, then they would have shorted there. It's very perfect setup for shorting right there at that particular moment in time. But right now it's not. There's your statistical mean right there, that blue level right here. This is it. It went to positive 3, then from Tuesday, then it went to the statistical mean from today. Again, not wise to take a move from that. Whole lot of volume in this candle. At 8:30, I assume some news event possibly broke jobs numbers or some data point that's nonsense. It don't really matter no way. So again, it's not wise to take a move at this point unless you just love flipping coins. So that's many times where the market's at close to market open. Many times since they took profit here, this came down to statistical mean level, and they more than likely will try to shoot it up again, unless whatever news counts came out like it's actually bad news. Can come down to the ATR trying to stop, and that can make a push. But that's all cans and what ifs and stuff. The better move was this morning. If you happen to catch that perfectly and seen all that sell volume coming in, and held till now, you'd be up $50 times 50. That necessarily wouldn't be a bad day by no stretch of imagination, if you was able to hold through all of that. On another note, my RSI levels, it did show up as being potential bounce here, 545 at 606 to 607 potential bounce point. You got into a statistical mean level on RSI. It was decision time again. I know there's plenty of decision to be made, but it broke above the 50 moving average, broke down. And all through here at 626 or whatever, when it broke down for whatever reason, that sell action, all that was about an RSI level. But my rule is I have to have a green candle at least and a break above the 10 moving average again to take a position. That's what the algorithms did here. That was a better move to the upper side. Then getting into the Tuesday's level of the positive 3 deviation would have been a selling point. 721 showed up as being a higher RSI level, and they sell off into that. That's the last time you've had a higher RSI also is at 721. So getting back into statistical mean again, even if you time it perfectly from there to the mean is $12 times 50. and then you're literally stuck. And this is what it's like though, looking at the markets. Is you're not wise to take a decision here or move unless it's like you have other means or metrics or whatever collective, maybe on a 30-minute time frame it might show being a little bit different. The last 30 minutes it shows up as being nothing but sell volume, but that can flip in a 30-minute time frame. Whenever 9 o'clock hits, it can flip. If news did break at 6:30, which I doubt it, that was the biggest volume node and it's from here to here. What many algorithms do is they do Fibonacci between here and let's see if I can nail it more perfectly there. Then you get back to your 1 minute time frame, and that gives you a higher level from there, and positive 4 deviation. That gives you a lower level as well. -4 to -6. -4 to -5 deviation. If it drops down here from this volume node, then that will be picked up just from this volume node. If it gets into positive 5 deviation from that level, then that will be sold off into, if that's all fine, well, and copacetic or whatever. That's your levels from that 30-minute node. And you can sometimes base it off that. Again, your statistical mean is here from that one, so it's still hovering around it. The statistical mean on the daily is here, so you're hovering around that. Again, it's not wise to take a decision here. It's just, unless you like flipping a coin. That's the gist of it. It is a good Thursday to trade, and I was up around that time. I just other stuff, took the day off today. The thing that sucks about like this, whenever getting positive 2 deviation on the daily, is that it's harder for me to set an alert for that. Looking for higher statistical levels. Mine would have been up here at 74, 92 or something in that area. You'd be above the top of the average daily range. That's what I'll be looking for as more resistance. If 9 o'clock and 9:30 hits and it's mostly buy volume, then it can shoot for that in the day, and that would be my level to potentially take a short position there, at least watch it at that time and expecting a lower move from there. That's just me. I mean, it may spike, like yesterday, for instance, or whenever I got that alert. I think it was yesterday. The day before, but whenever I got that alert, it went above positive 3 deviation. It spiked up to it, and that was a high day. And then it slipped below that at some point. You need to take profit. It's not a forever thing. And again, right now, it's stupid to take a position right now. It's just dumb as hell. Anyway, I still think my expectations for, I think 8,200 is what I said I thought I could do. I can go back and back test all that, but 8,200 I think is what the yearly level that I had modeled out can possibly hit. And we're not even 6 months in. There's the old saying, sell in May and go away or whatever. On the monthly though, level 4, the month of May, I had this level here. I had to zoom in closer. I was close, but no cigar. My level was 75.50 basically, and then 75.40 for the month of May. Many times what I like to see is it to hit that level, then the next day to hit it on a daily. Then that's like the ultimate potential short position. You just had like massive sell volume. The next day after that, you had a doji candle. So you come up to the previous doji level, the median level. Then you can short from there usually, and then that's kind of what you got now. So that may be a hesitation point. Like anytime it gets into that, it gets hesitated and sold off into. So that's more correlating with my thesis of levels that can be shorter or should be shorted or whatever you want to say. when it don't go to the end. Yeah, see, it's even though I think that it can get up to here on the day, and that's 100% within reason. From right now, it's 100% within reason. It's at the ATR trailing stop right now. If that holds up, then it can push from there. And I have no information outside of the chart in front of me. That is it. This is how you silence all the bullshit noise that's out there. You wait for your entries. You don't chase it. All right, goodbye.